When you look at China and the fact that the vice premier is actually showing up in D.C., does it mean that they're willing to give something?
I mean, the Chinese are not going to be the ones to derail these talks, right? So it does feel like Trump, contrary to Lagarde, still feels that trade wars are easy to win, and he has been emboldened by probably the good economic stats out of the U.S. But the Chinese are giving it this last-ditch effort, and it is also because they have less leverage, right? They have less things to slap duties on than the U.S., so they're not going to be the ones seen as derailing this round.
Jordan, what is the likelihood, if this deal doesn't get through, that actually renminbi goes to 7? Or if this time, we have tariffs of 25%, are we back on track for next week for some kind of negotiation?
Well, I think this has come at the worst time. The market was very long, the S&P, very long risk, also a little bit long China as well. So the downside is the tail risk that really has the bigger market moves. And all we've seen so far is the market go from pricing a very small chance of this falling through to maybe a 30% chance, but it's definitely not the base case. So I think the risk reward now is still for the uncertainty to prevail, even though I'd like to say it will be fine. It's very nice to say that. I think we have to assume the worst, because if I think about the upside, yeah, you can make 2%, maybe 3% on the good news that the trade talks carry on going. A deal just seems quite unlikely in such a short time frame. But the downside's much bigger. Trade talks fall through. We're talking tariffs across the board on all imports. The U.S. consumer pays, not the Chinese. And the irony of the situation is that it doesn't actually impact GDP or inflation that much. In terms of tariffs, they feed through in quite small amounts. But it's whether financial conditions tighten, that's where the kicker is. And I think we will see that, because the market's going from a very, very vulnerable position. Long S&P and short VIX, that was where we were before all this kicked off.
Jordan, the Chinese renminbi is a managed currency until it's not. Yesterday, it was 4.3 standard deviations weaker. Folks, that's a definition of an unmanaged move. What is the response of China to that? How do they react to the unmanagement of their managed currency?
Well, the first fix we had over the weekend showed you that they didn't want this to get too far out of control. So that was good news. The fact that talks are ongoing is good news. And Tom, I feel like I have my Brexit hat on when I say the default of no deal, of a deal, is no deal. So therefore, we always knew that if the Chinese didn't come to agreement with the US, we were going to have tariffs come into place anyway. So I think the Chinese are a little bit more on top of this than what the general commentary in the sort of media was, because we have come from a place where no one thought this deal falling through was an option. And now we're just going to where things really were. So I feel like reality has kicked in, but we're not there yet when it comes to things falling apart.
Michal, what does this do to economic growth? I mean, Madame Lagarde just speaking in Paris, she's concerned about economic growth. That's part of her remit. But what does it actually do to economic growth around the world?
And we'll have to see exactly what kind of tariffs get slumped this week. But in terms of economic growth, at least for China, the estimates vary from 0.6 percentage points on its GDP growth to 1 or even 2 percentage points in the next 6 to 12 months. But I think the reality is that the Chinese leadership is stepping in with support. Right now, it's still targeted support, and there's a RRR cut coming next week. That's for kind of small and medium banks. But if there is a sense of, and the Chinese were not confident that this deal would happen, or that even if it did happen, that it would stick. So they have been lining up a series of fiscal and monetary policies. But if it falls apart, then the credit binge could be upon us.
But PBOC is still there, right? And so far, the stimulus that they've put in place actually is taking hold.
It is taking hold. I mean, Q1 data was positive. How much do we read into the Q1 data? I think it remains to be seen. There's always a credit surge at the beginning of the year, and certainly the Chinese needed very good headlines, not just for the trade talks, but we also have to bear in mind that we've got the 30 years of the Tiananmen protests coming up next month. China needs a very good story for its domestic audience. The fact that it's also helping the international audience and potentially giving it some leverage in the trade negotiations is good, but it's all about the domestic audience.